And it's time for another end of day report with yours truly, Dex, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWave So you guys know that um, the markets have been getting ready, preparing themselves to move in like fashion, like we talked about this morning with the pre-market pulse scan. Markets are trying to decide and determine the likelihood of a Biden versus a Trump victory. And that's kind of where we are stuck. So a range was established on Monday, and now we're just trading within that. Today, we also got somewhat of a continuation pattern. And from there, now it's time to retrace the lost ground from Monday. All right, now this could take place between tonight and tomorrow, or it could have a 1 day delay. Sometimes the markets will do that. They'll have a delay, and you won't really see everything manifest together at the same time. So we have these micro bursts, if you will. Well, we have these intraday trends that then exhaust themselves before the trading session is over. And it's just one of those things that you can expect because there's so much going on right now. We have this intraday volatility because of the election coming up, earnings, government reports, jobless claims, just so much going on right now that you have to look forward to and also expect, which means you have to be forward looking. All right. But then, of course, we're dealing with markets. So markets are not necessarily forward looking, but they're looking all around. Projections this, projections that. And it makes it so that it's very difficult to get a handle on how the markets will factor in these different and anticipatory events. So you have an idea of what's happening, but you don't know how the markets are going to respond to what's happening. And, this week, as you know, we have 7 days until the election, and this week is packed with government reports. Thursday, we got gross domestic product, initial jobless claims, we got continuing jobless claims, and we got pending home sales index. And this is just all on Thursday, and gross domestic product. Then on Friday, we got personal income, consumer spending, core inflation, employment cost index, and consumer sentiment index, the final one for the year. So, yeah, we're getting close to the end of the year, and there's just so much going on, and you just have to be ready. You literally have to be ready for just about any and everything. That's why I have been in the lab nonstop, working my tail off to get you guys positioned, and not just positioned, but positioned rightly, so you can be able to understand what's going on and where we go from here, etc., etc., etc. All right, let's go ahead and knock this out. Our first chart, as you can see here, is GBTC, the ETF for Bitcoin. And you can see here the market is continually giving upside production from the rally alert back here. We do have these gaps on the way up that need to be reconciled at some point. It's looking like GBTC wants to hit $16 before making up its mind if it wants to back and fill immediately or wait a little while longer. But for right now, the market bias is up, and so is the trend bias. It is up. All right, bulls are in control of this market for the time being. If you take a look at the actual Bitcoin itself, as you can see here, again, the market bias is to the long side. We got this rally alert back here, and we've been getting upside production continually since then. And I do not anticipate that the market is ready to fall yet. Looks like the Bitcoin now wants to test somewhere between 14,000 and 14,500. All right, so that's a key area of resistance if the market's going to hope to get back up to that 20,000. It's going to have to clear 14,000 to 14,005 and build a support zone there. Just like we did at the 10,000 to 10,500 level that I had predicted for you months in advance. And then the market did just that. Well, now we need to build another one between 14,000 and 14,500. Look at where the support of the Kumo cloud is. It's right at that 10,500 level I was telling you about. I gave you this when the market was back hither, if you remember. And then here we are, okay? You can't make this stuff up. You can't pull it out of a hat, all right? The numbers don't lie. It is what it is. All right, so taking a look now at Ethereum, okay, sticking with the crypto side right now, we have a rally alert for tonight into tomorrow's trading for Ethereum. This one's been flip-flopping around. All right, it gave you that downside production from the last crash alert. Now it's looking ready like it wants to rally up. We do have a bullish trend momentum reading, and the trend bias is also bullish at this point in time. All right. So we'll see how much energy it can get behind it. Ethereum's been kind of lagging a little bit. All right, here's Ethereum. I'm sorry, here's Litecoin. Litecoin's been lagging also. Flip-flopping here. We got a rally alert for tonight into tomorrow's trading as well. Trend bias is to the upside as well as the market bias. Okay, so these two are in alignment. Just don't have enough momentum to help push this market, and that's what is lacking. We need conviction. So I think we're going to get it. We got a bullish weekly trend momentum reading. I think Litecoin and Ethereum will begin to take off here. How about the infamous Facebook? All right, so we still got that bullish weekly trend momentum reading, but we have that crash alert that we came into the market with today. And instead, we got no production whatsoever. And we got a narrow range inside day, which was expected. And now this is just day one. Remember, this can lead the market 3 to 5 days out. So definitely, if you're trading this one, you're going to want to use the report and figure out what's going on. If you are looking to get long this market, but you do not see a long entry for this particular market, then you need to watch the weekly intraday price inflection points as indicated on the report. If those are violated, then that's telling you what direction the market has decided. Okay, so just keep that in the back of your mind. Okay. Let's see here, moving right along. All right, here is the Ethereum ETF. It is ETHE. All right, and we have a rally alert for tomorrow's trading on this one. It also has been doing a little bit of flip-flopping around. It's trying to get itself back deep into the Kumo cloud. We got a bullish weekly trend momentum reading. And like I said, the market is struggling at this strong resistance. Whenever you're between the trend line and either the top or bottom of the Kumo cloud, that acts either as a strong resistance when you're under it or a strong support when you're above it. And that's where we are right now. Okay, so this one's going to need a lot of energy in order to push through and stage a rally. If not, then I think the bears will win out and be able to push the market back down. Here's the mighty Bitcoin, as you can see, looking real nice. This is the Bitcoin Futures Composite Index on its way to 14,000. As you can see here with the continual upward momentum, and we're getting all this wonderful production from the rally alert back here. And we got the bullish weekly trend momentum reading as well. Things are looking good in the Bitcoin space. But what about precious metals? What about gold and silver? Well, you're not going to like this. But right now, as you can see here, we have the bears still in control of this market. I know the complexion is a bullish one, but the bias is bearish. And you can see these ranges are starting to narrow and narrow. So a breakout or breakdown is imminent in the gold market. They got the overhead resistance, which is the bottom of the Kumo cloud. So this one is a tug of war between the bulls and the bears. All right. Here was your crash alert back here. You see you got that downside production, but it's kind of muted, right? You don't have any bearish weekly trend momentum or bullish weekly trend momentum. You have no momentum at all. It's as if both the bulls and the bears have just thrown their hands up in the air and say, I give up. Gold isn't going anywhere, and it hasn't. All right, look at this. Look at these narrow ranges. It's not going anywhere until it does. When you have a tight situation like this, it's better just to stick to your weekly and see what happens. All right, follow the weekly report to find out what to do. Don't look at the dailies, look at the weeklies, and you'll probably be a little better off in doing that than following that mechanism instead. All right, at least until gold does something. All right, the NASDAQ 100. Okay, so the NASDAQ 100 has a rally alert for tonight into tomorrow's trading. We've now flip-flopped from a bearish bias back to a bullish bias. We got all this downside production from the last crash alert. I'm anticipating that this rally alert will get halfway up before running into resistance at 12,000. So it should be good for maybe 200 or 300 point run, and then we'll see where it goes from there on the NASDAQ 100. All right, next we got silver. I know silver is struggling and finding itself in a rather similar predicament as gold. Not as pronounced as gold, but like gold nonetheless. The only difference is the trend line is right below the bottom of the Kumo cloud, and that's offering a stiff resistance for silver right now. But we do have a rally alert for tonight into tomorrow's trading, but this one could reverse at any moment. I know you have a bullish complexion, but you don't have that bias until now. As far as bullish, you were having primarily a bearish bias because we had a nice little run up from this production here, and then we came down. So we do have a bearish weekly trend momentum reading, but I think if we get enough momentum in silver between tonight and tomorrow, that will be erased, and then we'll stage a rally to the top of the Kumo cloud as silver gets back up to 26 and then maybe even 27. All right, taking a look now at the Australian dollar. So the bias is still to the upside with pullbacks being bid. We're right at the trend line resistance area. The market wants to try to make a run back up to the top of the Kumo cloud. As you know, markets like to run the top of the cloud and the bottom of the cloud. And then it tries to determine, as the ranges narrow, which way it wants to break. Is it going to fall off the cliff, or is it going to explode to the sky? We shall see. We do got a bullish weekly trend momentum reading. Maybe that can offer some momentum. We'll see. All right, looking at the euro dollar. Let's take a look here at the euro dollar. As you can see, still a downward bias in the market. That has not changed, even though you are in a longer term bull or bullish configuration. But the rallies keep getting sold, and we're starting to bottleneck up in here with ranges starting to get a little bit tighter. We got a trend line right here. The trend line support is a pretty strong support, but the overhead trend top of the Kumo cloud is offering a strong resistance. Something has to give in the next few days. Either we're going to break out to the sky or roll over and fall out of the Kumo cloud and over the cliff. The only way to know is to follow the reports. Just follow those reports. They won't steer you wrong, man. All right, next we have, last but not least, the pound sterling. What's up with that British pound? All right, so we got a bullish weekly trend momentum reading. We got this crash alert back here, and we've been getting downside production. That has not changed. The market bias is still bearish, even though we got a bullish configuration. Something's got to give, though. We're right here at that intersection of the Kumo cloud, which is a strong resistance area. Right here is your trend line support. All right, so this is what it is right now, ladies and gentlemen. All right, so that's what happens when you're in a cloud. You test the bottoms of the cloud, and then you test the tops of the cloud. So this one has to make a decision too. You got a bullish weekly trend momentum reading. Anything can happen. Market's starting to quiet down a little bit because they don't know which way they're going to turn. Where is the world headed? With this election and all the reports I told you that's coming out, it makes it rather very difficult. Okay. So it is what it is, man. All right, let's see here live. Okay, it says morning all decks following the theme from your pre-market post scan videos from today. Can we check out Komatsu 6301 on the TYO? Let me see if I can find it. Never heard of that one. Let's see here. Okay, you want the 6301, Komatsu 6301 on the TYO. I think I got you covered, my man. I think I got you covered. Hold on. All right, is that an Asian stock, Loco? Is that like a Taiwan exchange or something like that? Let me know if this chart looks right to you. This is what I got. Komatsu 6301.T. And this price point look right to you? We got a crash alert for tomorrow's trading. I have a close around 2475.51. All right, let me know if this chart is looking right to you. Make sure I got the right thing up. I think I do. I do believe that I do. But let me know. And I'm gonna add this just for those that don't know. I do have Hong Kong and Chinese stocks, but I put them because I didn't have that many people trading it. So those, if you're looking for them, are located in the U.S. equities tab. All right, just so you know, if you're looking for that, for those securities, it's under the U.S. Stocks, U.S. equities. And like I said, because I didn't have that many, so I just put what I had in there. And I'm looking right now. I will add this one because I'm almost certain I don't have it in here. So just give me a second, and I will find this for you and make sure I add it. That way you can follow it. And when you go to your dashboard, you can pull it up by typing 6301 or typing the name Komatsu, and it should come up for you. And I just added it, so it will be on the U.S. equities report in the next report. So this one does have a crash alert. We got we switched from a bullish to now a sell bias. Trendline support is the target for this one. All right, so we'll see what happens on a pullback, but the overall longer-term trend looks pretty strong here. Looks very, very strong here. Nice upward trajectory, and looks like it has room to run, but I think we're going to get a correction like we did back here, right down to test the trend line support. So this one doesn't look like it's going to be as pronounced as this one. So, because you can see this one was a lot further away from the trend line than this one is. So I do believe that it's going to come down and do that. But also be advised that we do have a gap right here. This is a gap. The market gapped down today. So this gap is going to have to be reconciled. It's a high probability that this market could gap up on next day's trading just to fill the gap before we get downside production from this. All right, it's a possibility, but just know that this is where you are right now with this one. Okay, this is where you're looking. It's where you're looking. Tokyo Stock Exchange. Okay, no problem. Thanks, Loco. Thanks for letting me know that. Okay, so let's see what else we got. You want to see? Oh, Caterpillar. Okay, all right. Let's pull up the Caterpillar. Let's see what's up. Let's see what's up with Cat. All right. Cat is definitely on the U.S. equity report. on the dashboard. Okay, so Caterpillar, we talked about that this morning, didn't I? I talked about Caterpillar and copper. Copper futures are called Dr. Copper. It's said that copper has a doctorate in economics, and so does Caterpillar. Caterpillar is used as an index to gauge U.S. Economic strength and activity. So the both together tell a story, and right now the story is being told is that you went from an accumulation phase now to a distribution phase. The market bias is to the sell side. Here's the crash alert here, and look at all this downside production. This has been netting. We're on our way to the trend line support, which is your initial target on this one. So this one right now is on the sell side, my man. Coinbase is down again. Why am I not surprised? I see you, Jeff. Do I have time for RMG in London? Sure. Let me go ahead and knock that out for you. RMG in London. Let's see what we got. RMG. All right. RMG acquisition, I believe, correct? Let's see. Let me know if this chart looks right, okay? Let me know if it looks right. All right. Okay, Golden, does this look right to you? All right, so this is RMG acquisition. All right, and it looks like it closed around $10.18 today. All right, so this one is under a sell bias. Okay, so this one right here is a sell bias. It's already broken trend line support, which is now trend line resistance. It's also below the Kumo cloud, and you got a bearish weekly trend momentum reading. However, the longer term chart is still bullish, which means that this pullback, whenever it finds its footing, will be bid right back up again on the next rally alert. So for this one, bears have control of it right now. Okay. So what I will be doing though is waiting for the next rally alert, because that next rally alert should be pretty powerful. Let me see what this blue thing. Okay, yep, this is definitely a pointer. This blue bar is definitely a bullish pointer. So at some point, this will need to be reconciled. I think once this support is found, that's where you'll get your buy-in chance. All right. All right, let's see. Okay, so I have the wrong one. It's Royal Mail Group. Okay, my bad. My bad. Let me take this one out. Royal Mail Group. Okay, let's go back in. Thanks for correcting me on that one. Royal Mail. Okay. It's been a long day and I'm tired. I can't think straight right now. What's that London exchange again? I can't think of the name of it. I'm drawing a blank. I think I got the right one though. Okay, I think I got the right one. Let me see. Let me see if this is right. Okay, you said around 245. Okay, I'm getting 239.30. Maybe this is the right one. Here's Royal Mail. Is this looking better for you? Royal Mail Group. Okay. I just cannot. I'm just drawing blanks all over the place. Okay. Okay. So Royal Mail Group. No. Okay. Okay. So this one here, we have a bearish bias in the market, but we got a bullish weekly trend momentum reading. Here's your crash alert. Now, the last crash alert we got on this one was back here. We did get some downside production, not a whole lot, but you did get some. Then you finally got that reversal on the rally alert, and then you got this upside production. Now the market is flip-flopped again to a bearish bias, and you did get some downward production today from this one. The trend line support, though, is the initial target. I thought it was going to probably reach it back here, but it didn't. it only came down to here, and then you went here to here. So chances are it should get closer to the trend line on this next pullback leg here. It's just hard to say. The way this market right here is moving, one could argue this is normally a topping pattern before a big correction, because after this initial rally alert back here, you got all this incredible upside production, but you haven't had a real pullback. Normally there's at least a 50% retracement of this bar, even a 61.8 or 0.2, whatever that Fibonacci 60 number is. Like I said, I'm tired, I can't think right now, but that's usually what you'll get on moves like this. You haven't even gotten that. So at some point there's going to have to be a corrective situation here. Okay, so no, I don't see a gap golden on this one. What I do see is like I said, this parabolic bar. Whenever there's a parabolic bar, okay, this is another thing we never really talked too much about. All right, so you have gaps, you have pointers, and you have parabolic bars. Those three, we call them the three amigos. All right, parabolic bar, pointer, and gaps. They're cousins, okay, or you can call them triplets because they have the same rules to their game. All gaps get filled at some point eventually. Pointers also get taken out at some point eventually. Same thing with parabolic bars. They get retraced, all right, at some point eventually. Not taken out, but I said retraced. You got to give something back. At least a 50% retracement is due at some point, okay? And I think that this crash alert may be that alert that gets us, that starts that chain reaction to get us there. So at some point we need to get to about around the $200 mark. Maybe not even that low, but anywhere between, I want to say between 220 and 205 maybe, but 200 is the actual floor that you would expect. So anywhere between 215 to 205-ish is where I would expect that this one will eventually go. Okay, so that's kind of where I'm looking at. And I will go ahead and I will I'll add this also. And like I said, this will be on the US equity report. All right, just let me add it real quick. RMG.L. All right. No, actually, just go like that. Okay. Oh, looks like this one is already on here. Okay. Okay, this one, RMG, is already on the US equity report. All right, so it is what it is. All right, can I look in the history around last Christmas? Let me see. Let's see. Let me see how far back I got. I went too far. All right, hold on. All right, so around Christmas, that would be December the 25th. Okay, so here we go. This right here is the week of the week of Christmas 2019. Okay, and this was a gap here, but this gap has been satisfied with this downdraft here. All right, and then you had a gap down here, but then the market came back and fulfilled this gap with this upsurge here. So I'm not seeing a gap. I'm not seeing a gap on the daily chart. This gap back here was huge. This one was on November the 20th of 2019. This is a huge gap, but this got filled and reconciled with this upward thrust here. Then you had a little gap right here, but it was taken out with the downdraft here. So as far as the week of Christmas for the RMG, all gaps have been satisfied. There's nothing to really be concerned with it. Now, if you're talking about this pointer right here, on December the 13th, where you went to you hit a high of 258.60. Let's see what happened here. 258.60. Ah, is that what you're talking about? That pointer, that 258.60? Okay, I'll give you that. Not that's a good point. The 258.60. Okay, so we know that we have a pointer from last year to 258.60, and this is on its way to take that out right now, right? So far, you got to a high of 256.01. So I see what you're saying. That's a very good point that you brought up. So it is possible that either this is a pointer too, though. So it's possible that after this is retraced, that the market takes off. What you want to see as far as long-term strength, you would like for this to pull back and successfully test this and then rally. That means that there's no near end in sight of the rally. But if it goes up here and takes out that 2019 high from Christmas, the week of, the end of November up to December, then that means that the trend is short-lived. You never want a market to take off without handling its business. It needs to take care of its gaps and its pointers and its parabolic bars before moving ahead. If it moves ahead first, then you know it's not going to last because it's going to come down here and just disappoint people. So you want to see this taken out sooner rather than later. Put it to you like that. Does that make sense? All right. Well, that's it, ladies and gentlemen. Eyes and ears open, man. These times that we're in are bananas. It's not the markets that are bananas. It's the times that we're in that's bananas. It's the people. It's the uncertainty going on. It's the geopolitical risks that are happening right now. It has nothing to do with the markets. The markets are fine. It's the things. You're welcome, Golden. It's the things that's happening outside the market that's causing the pain right now. Oh, and what up to everybody in the live chat? What up, Mick and Golden and Kyle and Loco and Jeff and Silver? What up, everybody? Smash that like button for me. Yeah, so that's it, man. I mean, really what we're doing is we're basically sitting on our hands waiting for something to happen. At the end of the day, what we like to do, we like to wait for rally and crash alerts before we do something, because then you're catching the beginning of something and not chasing the middle or the end of it. Does that make sense? So that's kind of what we like to do at all costs, if we can. Sometimes you miss things and then you just got to roll the dice and take a chance. But it's always better when you don't have to chase it and you're just out there doing what you got to do. You know what I mean? So I'm always going to choose waiting for my signals over just jumping in there afraid you're going to miss something. It's always going to be better for you in the long run to not miss your trades in the first place. Does that make sense to everybody? So what we want to do, when we get these signals, these rally and crash alerts, go ahead, read the report and follow that. Start following it right away so you don't miss opportunities. Then you don't have to worry about chasing the market because you're always going to be on point. All right. So with that being said, you guys, you know what it is. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. I'll see you guys. Oh, tomorrow morning, I may or may not be back in time to do a pre-market post scan. I have a very early morning doctor's appointment. So if I'm in and out, then as soon as I get back, I'll jump on and we'll do the pre-market post scan, okay? With that being said, I'll see you guys in the trading room, and I'm out. Peace.